We have precious metals expert Joshua Rotbart from Jrotbart & Co. back with us on Talking Wealth to talk about the demand for gold and the price outlook in 2022. Joshua Rotbart, welcome back to Talking Wealth. How are you today?
I'm good, Janine. How are you doing? How have you been?
Great, yeah, good, thank you. And obviously we're doing a bit better than you guys are over there at the moment with all the lockdowns going on. I'm sure that must be affecting you right now.
Yeah, Hong Kong has been slightly, I would say, unpleasant. I mean, we've been going through what maybe you've gone last year, a couple of years ago, which is partial lockdown and high rate of cases and some fear factor. But, it is what it is. Yep. Just want to get it done with and move forward like other places in the world.
Exactly. Look, what's going on with gold demand and the trends at the moment? Do you want to tell us a bit about that?
Yeah, well, I mean, I think last time I was on the show was towards the end of 2021. So I think we're actually looking a bit of, we have now the data, it's at this point, beginning of 2022, to look back on what happened to the physical demand for gold in 2021. And when we look at the figures, actually, 2021 was quite good for gold. So, but I want to separate between the price and the demand. So, price of gold went down. I think we discussed this last time. Went down around 3% in 2021, which was 3 or 4%, actually 4%. Which some people say, how come it went down with COVID and everything? And I always tell people, remember, in 2020, gold gained almost more than 20%. So, if one year gains 20%, it's only natural to back off slightly the following year. So I would say the price in 2020 went down 4%. But if you look at the demand for physical, actually it's quite astonishing. Almost all demand information is up. If you look from the technology sector, it's up 9%. Jewelry, especially jewelry is half of the global demand for gold. In jewelry, demand for gold in jewelry sector bounced back to levels we haven't seen since 2013.
Okay, so people are actually, because they can't travel, they're thinking, oh, well, maybe I'll buy my partner and get in the good books. Maybe your wife needs a new bracelet at the moment, given that you're in lockdown.
That's exactly what we did last month. And it's exactly as you say, with available income, with less going out for whatever, restaurants and vacations and travel, there's a bit more available income and people feel like they want to spoil themselves. So especially Q4 2021, we saw big rebounds in demand for gold in the jewelry sector. And really, the last time we saw the numbers, and we're talking about 2,200 tons of gold demand in 2021 for jewelry, the last time we saw that was 2013, which was the highest demand for physical gold in history. So it was interesting that the moment we have economies opening up, there's a bit of more available income for people. People buy jewelry. The factories are going full steam ahead and start manufacturing jewelry again. So jewelry was definitely a big driver both in India and in China. And then you add on top of it, the central banks have been buying quite a lot of gold in 2021. And again, interestingly enough, the central bank holdings now of gold are almost at the highest level in the last 30 years.
Yes.
So it seems like everyone kind of woke up kind of mid-2021 like, okay, COVID is not going anywhere. We need to get back to business as usual and see how we're doing. So in 2020, the central banks were selling gold. In 2021, they were buying gold. Same for jewelry. Technology sector, we think it's part of the 5G expansion plans. Technology sector demand for gold has increased. And very interesting, the demand for investments, bars and coins. So what we do, physical gold, whether bars or coin, the demand was up again to almost all-time high, to the same level we saw in 2013. Meaning people were buying a lot of physical gold, especially also Germany and the United States.
And do you think that's got a lot to do with the conflict that's going on in Russia at the moment with Ukraine?
So that's it. This is what I want to mention about mostly about the price, which is a bit more later development last month. But just to touch maybe on one more interesting point in 2021, because this is slightly when the conflict, I would say, was building up without making global headlines. I think in 2021, what we saw on the retail demand is the fear of inflation.
Yes.
Definitely, if you're looking at inflation in the EU and in the US and other countries, definitely people understand inflation is coming, and we saw a correction in the equities market. So I think these two factors push people to buy gold. And last fact I want to mention, which is noteworthy, is that in 2021, actually the ETFs shed a lot of gold from their balance sheet, which means, in my opinion, that people are kind of gave up the paper gold and decided to move to physical gold, because it's interesting. Usually it's the other way around. And this time we saw money pouring out of the ETF and a lot of money going into the physical gold sector, which means people say, you know what, I should probably buy the physical or convert my ETF holdings to physical.
Do you think this is, we're seeing a lot of correlations between what's happening in the US stock market and the Australian market. It's like a copycat sort of scenario. Do you think that someone's just got the textbook out and says, right, in these times, this is what we do? And the flight is more, based on theory and it being driven by, rather than just fear. Like often fear is driving the price, isn't it?
Yeah, so I think again, and when the price actually went down 2021 in terms of the reasons for buying physical, I don't think it's a big fear factor, because if you think of 2021, actually from a COVID point of view and geopolitically, it seemed pretty. If you can still remember what happened 2 months ago, it seems like it's pretty a bit more relaxed. So it seems like there's a more, I would say, rational decision-making process of saying, let's see what's happening. What am I doing with my investment now? Mm-hmm. And if you look at the data in the US, the available income of the average American went up, but was short of the inflation rate. So in terms of purchase power, the average American, for example, lost about 2% of the value of his money.
Yes.
So I think it's more of a rational decision. Let's buy more gold to protect ourselves from the coming inflation.
Okay, so you're saying it's more about rational decisions right now rather than fear. How much do you think that the movement by the central banks is having an impact on people's decision making, though?
In terms of buying gold?
In terms of saying, look, we can see that the big guys are doing this, and that's what their position is on gold, therefore we should follow.
Oh, definitely. I always tell clients, if the Chinese are buying gold, what do they know? They didn't know. Why shouldn't you buy gold? The same for the Americans. And this year it's interesting because it was more of the emerging economies that bought gold. Thailand bought a lot of gold. Eastern European countries continue to buy gold. So people are looking at what they're doing and said, if these guys are buying, the guys that have less gold than the average, I would say, OECD country. So saying, if those emerging markets are buying gold, they need to stabilize their currency, they need to stabilize their economies. Obviously, that's something me as a small investor should consider doing.
And what are investors saying at the moment about that? I mean, you've been saying for a while that people should buy gold anyway because it's a long-term decision. I'm sure that there's some people that have seen price movements and are now reassessing their position. What are people generally thinking that are coming through to you at the moment?
Right. So what we saw, and let's move forward a bit to 2022, and definitely what we see now the last couple of months is, of course, the crisis in the Ukraine, which pushed price up relatively quickly. I mean, the price moved up already 4% year to date, and it's only been a month and a half. So they're looking at the crisis in the Ukraine, they're looking at inflation, they're looking at interest rates, and again, it's about protection. It doesn't feel like it's an emotional decision. It's more of we need to protect ourselves because there may be a correction in the stock markets. There may be we're maybe heading into the armed conflict with Russia, which has so many consequences. I mean, from the oil prices to prices of other precious metal that's going to rise up to shortage in supply chain. I mean, that's what it is. The world hasn't recovered from COVID, right? I mean, we're still in it. And then you had some more kind of gathering to the fire, and people are okay. We need this protection. So what we saw lately, actually, we saw two movements when the price went up. So if people were holding gold for a while, they're happy in a way to sell it, or at least start lowering reducing their position because they made good money. But we see, on the other hand, a lot of new clients coming on board because of the need for protection. So then what we're hearing from clients, if they already had exposure to gold, is like, I want to take some profit because we're not sure again, when the price of gold appreciates 4% in a month and a half, this is quite rapid. So they say, let's materialize some profits, hold on because they expect some correction, and then we'll go back into the market. Okay. That's the guys that are selling. Or if these are new guys, they're saying, listen, we need to protect our purchase power. We need to get ready for a correction in the market. We need to look at the hiking the interest rates. And I want to mention just for interest rate, because usually interest rates, higher rates, consider kind of headwind for gold, because then you have better alternatives that give you better yield. But what people tend to forget is the effect on the equities market. So when the interest rates hike, a lot of the time there'll be some liquidity leaving the equities market. Yes. Because again, there are other channels, which in effect is positive for gold. And what we've been seeing in the last few years is that a lot of the time when central banks are tightening the fiscal supply, actually gold will perform better in the following month. It may not do as well later on in the medium term, but a lot of time the immediate effect is actually for gold price to go up because of fear of equities doing not so good.
Okay, so your outlook at the moment for 2022 for gold?
Listen, we're positive. I mean, if you would ask me whether you should buy today, I would say maybe you want to hold out until it's a bit clear what's going to happen with Ukraine, because once I think they settle it, assuming they settle it there, I think the price will go down a bit. But definitely we're optimistic. I mean,
so hang on a minute. Are you saying that, okay, with the conflict there, if let's think of the scenario, if Russia does move in, or when, it just sounds like a when, if they do move in, then what's the consequence in terms of the percentage volatility in gold likely to be?
Oh, definitely the price will go up. I mean, but I'm saying if it's I mean, you see mixed, if you look at the news now, you see like kind of mixed messages, whether something is happening or not. So it really depends. If the crisis will ease, I think the price of gold will go back, will back off slightly, maybe back to the 1800. But if this is going to continue, and we're definitely going to see some armed conflicts in the Ukraine, I think we're going to cross the 1900 mark quite quickly, which you would be surprised. We didn't anticipate it, right? When we're thinking in November and what's going to happen in 2022, we didn't think of maybe a third world war and Russia kind of invading a country that is pro-EU, pro-NATO. So it's hard to predict. So I would say, on the one hand, the geopolitical tensions, we have the still COVID, still economies are not fully operational. These are on the interest rates, right? That's on the one hand. On the other hand, let's not underestimate inflation. We discussed it last time. Last time, I think when we discussed this, the Federal Reserve was saying it may be a temporary phase. I don't think it's temporary anymore. And take every country, prices are rising up. I can tell you here in Hong Kong, we don't have vegetables. The supermarkets are empty because the products cannot come from China.
But they're saying with the supply chain problem that all of a sudden that should free up once things get moving again over the next year or so. But how long it takes, I don't know what the answer, and nobody does right now. So, but
exactly. So that's what I'm saying. I'm not. Mm-hmm.
If you look at history, the history of inflation in the US, right back to the 1930s, it shows that volatility can last for years, but it just goes in spits and spurts. In the 30s and 40s, after the war in the 40s, the inflation was just all over the place. It was quite high. And the same thing happened, I think it was around the 80s or early 80s, late 70s. If we look at what's happening now, inflation spiked really significantly in the US, not so much here, but in the US, and therefore often after those spikes you'll see a bit of a drop What's going to cause it to drop off? Well, obviously the Fed's hoping that what they're going to do is going to help keep that under control. But how many increases will they really have to make? I mean, they wanted to do it. They announced 2 initially, and the market didn't even respond to that, so they made it 4. But are they really still thinking that it will just be 2? They'll wait and see how that goes, and if they have to go to 4, they'll go to 4, but maybe they won't.
I think they're very careful on the interest. They can't be too quick about it. I mean, on that end, you're right. It's already factored in the prices, I think, because the writing was on the wall for quite a while. But they can't increase the rate, in my opinion, too quickly, because things are too shaky for that. I mean, you really want to now increase borrowing costs for SMEs or on mortgages, or even for us, we offer lending against that precious metal. We're not looking at increasing the interest rates because, assuming we're going to see it across the board. But one thing interesting about it is that there's a rift here between China and the US, because actually the Chinese central bank even lowered the interest rates even further. So I think there's no, I would say, one answer. It really depends on where we're at. I mean, China now has very low interest rates, and they will continue to be very low, almost zero. The US may increase it a bit. And gold price, I agree, it will bounce in a way back and forth, based on the news of the hour. And that's what I think will happen in the next few months.
I mean, I just think it all comes back to what you've been saying for so long, which is that people who are investing, if they're investing in, they need to really have a long-term picture, because this is going to play out over the next few years, and gold is holding its value really well.
Yeah, exactly. So, and this nothing change. I think the trying to look at the cycle from a very short-term perspective is maybe for professional traders, people who really leave the market, right, 24/7. Otherwise, trying to play the short-term game is really impossible in this case. One thing, by the way, I see from clients who are selling their holdings, that a lot of the time when we see clients liquidating based on an average price strategy. So they'll take their holding, the position they want to decrease, and they'll cut it into batches and say, you know what, let's sell every week. So at least we get the good average price, rather than selling everything in one go and then realize actually we could have sold it in a higher price and so on. I think those that are trying to materialize profits in one go, again, because of what you're saying, they should hold on and maybe try to think of a strategy of moving in or moving out in a bit more tempered way in batches, rather than go all in immediately.
Just before we go, can you please tell our viewers where they can find out more about you?
Should go to Jrotbart.com, where they can find all the resources, everything about our company. We're on Jrotbart on YouTube, of course, and Twitter, and online, of course.
Joshua Rotbart, once again, thank you so much for being on Talking Wealth. Take care.
Take care, Janine. Thank you.
For more information on our guest in today's episode, visit the link on screen right now. For more talk